Hey guys, Mike here. So obviously the stock market's all over the place today, and I assume it's going to be that way as the VIX actually did bounce off that trend line I showed you yesterday, and we'll see if that continues or not, but it's up between like 5 and 8% today. So we'll see if this is going to be a volatile month. I mean, we had a huge move up in July. It's like the best month since 2020, I believe. And so, you know, people will book profits, other people will come into the market. So we'll see what happens on that. But you're seeing some huge swings today in certain stocks. But there's a couple of things that I want to cover because a lot of you guys asked me some questions about stuff like this. And, you know, one thing I'm going to talk about is, you know, dollar cost averaging in a downtrending market versus just being patient and then getting in. You know, we're going to look at that. Two is one thing you can take from here on forward, because we're going to have a lot of bear markets in our lifetime, a lot of major pullbacks, and there's a couple reasons for that. I think it's going to happen more and more now because of the situation we put ourselves in 2020 with just extreme amounts of debt, the Fed being hamstrung from here on forward for the rest of time and what they can actually do to help us. And also just the amount of leverage that we use as it goes on, it gets more and more and more. And so that's what causes these huge swings. Of course, with algorithms being in control of about 94% of trades now, then, you know, I think that's why you're going to see it. So you can use some of this stuff going forward. But, you know, one thing is going to be, you know, think of a stoplight, right, or traffic light. You know, you got the green, the yellow, and the red. Well, I'm going to show you when yellow hits. When there's a flashing yellow and you need to say, oh, wait a minute, you know, when something in particular happens. And then another thing is what we're waiting for right now. If you want to see where this market's really heading, then there's something I'm going to show you to be looking out for as well, which I'm going to be looking out for, and I'll show you guys if it happens or doesn't happen, which I think will be huge. But these are just things you can, you know, one, teach your kids, your grandkids, you can use it going forward, and because it's all about preserving capital, right, and trying to not sit here and ride down every single bear markets into the ground, right? And so, because you'll be able to retire a lot early if you don't. And so the first thing is this: when this happens right here, this is not a red light. This is when we went from green to a yellow light. Caution, right? You need to pick your head up, look at the computer, and say, wait a minute, what just happened? And that is simply right here. You see on the NASDAQ, when it drops below that 200 moving average. When this happens, you need to lift your head up, quit looking down, and say, wait a minute, what just happened? Because you can see you get this big drop down, and then it tries to retest the 200 moving average multiple times, but we have not been back above it since January 2022, right? You look down here, boom, dropped below 200 day, then finally got back above it and took off. 2018, the same thing, it dropped below it, it tested it multiple times, so it finally did its final drop, and then tested a few more times, then broke above it, and we took off. And you can see when it drops below it, it's usually a yellow light to say hold on, and then when it goes above it, a lot of times, the majority of times, it's like, okay, cool, we're taking back off here, and it kind of signals the all clear. But, you know, you can see that's not always the case because, again, I'll give you the truth on this channel. You see right here, 2015, we weren't even in a bear market, right? And so I'm going to talk about that a little bit more in just a second, but you can see it goes below, above, back below, and above again. And so then you go back to right here, there's 2012, again, not a bear market. 2011 drops below it a few times. Most time what you see those is bouncing off of it, right? Here in 2008, the last real bear market we had the last multiple months. It drops below it, pops right above it, goes down, tests again, and then you get the major crash down. And the reason why it's important, I say it goes from a green to a yellow light, it doesn't mean sell anything. What it means is, in order for that to happen, that's smart money moving out of the market, not our money. Okay, we're called dumb money for a reason. We're usually behind the curve, right? And so that is big money, millionaires, billionaires, hedge funds, all that, moving out of the market and moving out quickly, okay, to be able to drop below that 200 day that fast. And you see it happens almost the same every time, and then tries to come up and retest it. So at that point in time, you step back, at least that's what I do, and say, what is going on? Because something just shifted. Either it was a one-off thing that happened and we got this quick drop down, or something has happened, right? In this case, you got the Fed tightening and everything else going on, inflation, all kinds of stuff. So this one was pretty easy to see. The others may not be, right? But you have to take a step back because sometimes it's going to drop below and you say, what just happened? And it wasn't anything major, right? Maybe two countries are getting into it, or we're getting into it with somebody else, or you know, something crazy happens in the banking system. You just don't know, but you have to take a step back. And if it's really bad, like it is now with all these macro things going on in the economy, and around the world actually, then you can say, okay, maybe I need to take some action here. Or, you know, you look at it and you go, there's nothing really going on here. I mean, what's going on? I don't see why this move is justified. And then all of a sudden you see what those the other times you get this move back up above it, and then we start taking off again. We don't even drop 20% on some of those occurrences. And you can see how many times the NASDAQ has bounced off the 200-day. If you go to the S&P with the 200, it's bounced off and respected way more. And so that's really what you're looking at. So that right there is key, that you look at that. And that's why when people kept asking me, you know, what are you doing? I said, I'm just staying patient, because with all this macro crap that's happening right now, all the negatives versus very few positives, and you see it drop below the 200, and once we bounced off and rejected, you go, ooh, okay, that really almost confirms we're going down, right? And of course, we have gone down. And so, you know, we're going to get into that in a little bit more after I get through this next chart. Now, what are we looking for now? Like, this is something I'm keeping an eye on. This will take time to play out, but it's called the kiss of death. And you know me, I like to keep it simple, so it's very clear. Here's what's happening here, right? You got an all-time high up there, as you can see. This is what you got to have. We're in this downtrend now. We dropped below that 200 moving average, right? And so you see that bottom right there where that wick goes all the way down. So we come down. All of a sudden, though, July is green. So what happens? We come up when we kiss the 200 moving average, right? So this is the kiss, right? The kiss of death. And so what we're looking to have play out here is we're looking to see the death part will be if we get a red candle that closes, actually breaks that low right there. So if we get a red candle in the monthly that breaks that low, that is the death part of it, right? The kiss of death. And just to show you what I'm talking about, if we just kind of go back all the way to, like, I think 08 is the best example to look at right here. You can see we had the red candles come down right there. You see that low right there, that red candle gives you the low. And you see, more importantly though, it has to be coming off an all-time high. So that's the all-time high right there. And so you get that right there, boom, there's the kiss. And we have one red candle does not break the low, but then the next one does. See right here, that one there breaks that low, previous low, and then what happens? You have the death, boom, the death spiral going down. So that's what we're talking about. Just show you when it doesn't happen. Prime example, boom, there's the low, there's the kiss, and what happens? We take off in 2018, 2020, there's the low, there's the kiss, boom, take off, right? So that's what we're kind of looking at to see what happens, to confirm, like, wow, is this bear market actually going to continue? Is this a bear market rallying right now? And so that's going to kind of let us know what's happening. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. And so that's what I'll be looking for at the end of this month and the next month. And it takes time to play that out, right? Now, if we all of a sudden get a monthly green candle in August and we're moving above, especially if we're closing above 200, oh, that's nothing but positive, right? And so that's super bullish. And so we'll see what happens on that. And the other thing is, like, just looking, because I know some people are like, oh man, if the bottom was in June, I missed out, oh my God, or something like that. And I kind of got to laugh at that, because it's like, here's the truth. If you were patient and you started buying 2-day on most stocks, versus if you actually DCA'd in starting, like, let's say December, and then DCA'd all the way into June and July for that matter, you're actually in a better situation. That's why I show you this. Like, I mean, DCA, and I do it all the time, right? And so, but in this instance, I'll be honest with you, I held. I bought 2 shares of Google, and then the earnings came out for first quarter, and I saw what was going on with ad revenue, so I stopped buying it all. So I'm waiting this one out to the next earnings to see what happens, right? And so, and thank God I did that, because that's where macro data and data in general comes into play, right? And paying attention to what's happening with your stocks. Okay, let me wait, which is a good thing, right? Because now it's dropped another 10 to 15% below where I was actually buying at. And so I'm able to get my costs down. And so, if we look, which I've been able to get it down, so now I'm only down like 4% or something like that in the position, which if I'd have kept buying, I'd have been down between like 10 and 12% at that time. But if you look right here, I mean, I just picked out some important stocks like Google, for example. And this gives you a chance to kind of compare, right? So if I DCA'd in from December 1st, and I bought on the 1st of every single month, it would be around 130 be my average, right? Well, if I started buying in today, it's around 115, I believe. I put these together yesterday. The cost is 115. Mine, since I started in March, I mean, my average right now, I believe is 119, if I'm not mistaken. And, you know, Meta, Facebook's another good example. Huge drops, right? If you DCA'd in, you'd be sitting around 246 if you started December 1st, bought every first of the month, you know, versus now it's what is it, like 160 day, I believe, or something like that. You know, so you're good, right? You know, NVIDIA, very popular one, average has been 236. Today I think it's like 185, if I'm not mistaken, in the market, if it ain't going up or down anymore. But, you know, so you're in a much better position. And, you know, ARK is a very popular one. Obviously, it's been dropping since way back in 2021, February 2021, I think. But, you know, again, from December 1st to now, every first of the month, it was around 68 bucks. Now you're sitting around 48, I believe today is. And then AMD was a very popular one. You know, you'd have been around 113 over this 7-month time frame, or actually been 8 months you've been buying. You know, and it's around, I think it's around 93 today. I could be mistaken, but somewhere in that range. I want to bring this up because I did a video a while back about downtrends, right? And I kept, you know, I don't call people out, but I kept just getting tired of all these YouTubers saying buy every dip, and they didn't really understand, yes, an uptrend, that's what you do. And a downtrend is just different. You will go through all your money, unless you got a lot of money, very quickly buying every single dip because there's so many dips on the downtrend because it's going down, right? And you get some really big ones versus on an uptrend. You know, I've showed you the uptrends before, right? You don't get a lot of them because you're going up, right? It takes time to get those dips, and when you do, you want to buy in there, right? And you see that you see an established uptrend channel like that. But in a downtrend, you know, DCAN is great. There's nothing wrong with it, but I do want to show you the difference. Like, if you're just patient, and I'm not saying we're at the bottom at all. I think tech stocks are bottom for now. S&P, you know, usually bottoms later on, which could obviously drag the NASDAQ, you know, tech stocks back down. But do I think we're going down below that bottom unless something crazy happens? Probably not. You know, but the S&P, I would expect all those, if oil is going to continue to plunge, you know, and all these fertilizer stocks, commodity stocks that the S&P has in there, which is what held it up all this year. If that happens, I expect it to go down because those I've showed you how overextended a lot of those stocks were like a month ago. I mean, they're way up, and they're reporting earnings Friday. They report earnings this week. They're going to continue to go up like crazy. So, but if oil keeps rolling over, wouldn't it make sense that they're actually going to come down like they always do? And so, you know, that's a whole different story. But I really want you to just look at this and say, look, I'm not telling anybody what to do. But, you know, for me, when I research stuff and I see stuff like this and it makes sense, and I go, okay, if I can decrease my losses when we do hit these, you know, extreme downtrends, which we're going to do, it's going to happen, right? Multiple times again in our lifetime. And, you know, the other thing I don't want to be is, and I'm thinking about this because, you know, I remember, I wasn't in the market in the dot-com bubble, but I remember so many people and watch years later these videos of these people that are getting ready to retire. And man, they got crushed. They lost like 50 to 80% of their retirement, right? In like a 2-year period, just watching them drown. 2008, same thing. I remember seeing people saying, man, I was getting ready to retire and I couldn't because it just went right down, right? And, you know, it's one of those things, okay, great. And if they held on, I mean, a few years later, like 3 or 4, they'd have been kind of back to where they were, but you don't know that at the time, right? And so for me, I don't want my wife now to be sitting there getting ready to retire, and here comes something I can't control, right? And the market starts doing what it does and starts going on this major downtrend, and I just sit there and go, I'll just ride it all the way down, you know, no problem, hoping, you know, whatever, when you can actually not have to do that, right? And you can see it cross that 200, see if it retests or rejects again. You pretty much know, like, okay, this might be a rough one once you include what's going on in the economy. Okay, is the economy slowing? Where are we at in the business cycle? That's why all these things are important. That's why I bring them up to you. Show you where we're at in the business cycle, all that stuff. And that's the key to it, right? I mean, they all kind of line up together. And so that's why I put a video like this. You know, I'm sure it'll get, I don't know, some people will hate it or whatever, but it's just one of those things. I like to put it out there. Anything I discover, you guys, I throw in a video for you. Take it or leave it, you know, whatever. Just let me know in the comments, you know, what you think. If you have any tricks of the trade, you know, love to hear it and stuff like that. But, you know, my goal going forward from now on in is to never ever ride one of these downtrends down again with, you know, stocks I could sell for obviously long-term capital gains. Short-term, that's a whole different story. That's a whole different video for that matter. But, you know, that's just kind of a big goal because I know, you know, we would be retiring a lot earlier if you can just not ride these things down with every one of your stocks you know, 20, 30, 40, 70%, whatever, whichever one you're in for that matter. And so just want to put that out there and let me know what you think, guys. Give me your feedback. I always appreciate it. Hit that like and subscribe button if you did get anything out of it, and I'll see you tomorrow.